Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Another pretty interesting week out there in the international equity markets. Really been highlighted by sort of out of the blue comments from President Trump regarding trade tariffs, specifically on aluminium and steel. He's looking at proposing 25% and 10% on imports coming into the US to supposedly protect the US industries. That obviously has pretty major implications out there, and various countries around the world have started to sort of get a little bit sort of interested in this, make various sort of comments. And really, it's not just quite as easy for Trump just to apply a sort of blanket cover out there. There are quite major ramifications and implications, obviously, for US trade, but also as well for global trade as well. You know, the last thing we need really is a global trade war. Interesting as well that you know, comments coming out of the Republican Party really seem very much against this. But again, you know, typical sort of Trump style, just seems to have gone off on a sort of tangent. You know, I'm the president, what I say goes, and that this is what's going to happen. So it's just going to be very interesting to see how this sort of plays through. On the positive side, though, there do appear to be a little bit of softening in the views towards sort of North Korea. Certainly, you know, the sort of recent talks between North and South Korea have been very positive, and it's just going to be interesting to see if we can just get a bit of traction on that and a little bit of momentum sort of going forward. Obviously, trade tariffs notwithstanding, the US economy is still in pretty good shape, and it's just going to be very interesting now to see the Fed meeting later in March. Most people are expecting a further increase in interest rates, but more importantly will be their guidance going forward on whether we're looking for sort of four hikes this year, including the March one, or whether they're still going to stick to the three, and the sort of dot plot going forward for 2019. Certainly overall, you know, stated many times that, you know, the US economy is in pretty good shape. You've got low unemployment, you've still got relatively low interest rates, and on a historical basis, you've got good growth, and more importantly as well, you've got good corporate earnings coming through as well. But I say, you know, at the moment, you know, a little bit of a question mark out there with this sort of trade tariffs potentially being sort of floated out there by the president. You know, and if he does sort of try to push that through, it's going to be very interesting to see how it sort of plays out. Elsewhere, Brexit's still sort of rumbling along, you know, going very little headway is being made, and you know, really getting pretty much a sort of crunch time now, and it's going to be interesting to see if anything does get sorted out before sort of like September, October, when it has to be put forward to the various parliaments. There's still obviously the ongoing issue as well with a small core hard group in the UK who apparently are going to vote against it no matter what. Europe, though, again, looks, you know, in pretty good shape. The economies are sort of pushing along. Obviously, gaining a little bit of sort of support as well, obviously, from the European Central Bank and its bond purchases. That's expected to continue around until sort of September time, and it's just going to be interesting to see how that sort of plays through once you get to September, because at present, inflation in the Eurozone is still benign. New Zealand's still in pretty good shape as well. You know, economy's sort of pushing along. Rates that we've been told by the Reserve Banks are on hold until at least sort of mid to late 2019. So it's going to be interesting to see if they can sort of stick to that sort of timetable given the fact that US interest rates should be above New Zealand rates by sort of June of this year. Plenty of options out there for people who are looking for income. Bonds are still looking a little bit sort of tepid at present. The new issues coming through are sort of 5 to 7 years, but their interest rate is sort of 3.8 to maybe low 4s. If that's going to be fixed for the next sort of 5 to 7 years, that looks a little bit on the low side for retail investors. Now, if you are looking for income options, there's plenty of options out there. You can give us a call on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.